I gotta add myself to the stream. All right, test, test, test. We're good to go. Okay. Good morning. We're going to be going over Bitcoin. We're going to be going over Ethereum and looking at some longer time frame models here. See how long this downtrend could last, where we're going if we're going to remain in a downtrend, and where we might go in the future. So first things first, let's do a screen share. Let's take a look. I might be a little bit ahead as I'm starting to map things out already. So let's go ahead and cover this up. So if you're watching on YouTube, what you're seeing here is the Bitstamp 3-day chart. It's Bitcoin paired with US dollar. And we have data that goes all the way back to November 2011. So this is a lot of data here, and we can kind of get a good idea of where we're going. But I want to show you a few things. So we're talking about market cycles, right? I'm going to go Benjamin Cohen on all your asses. Just kidding. So we're talking about market cycles, these impulses and then capitulations, impulses, capitulations, and an impulse. Now, I don't know that we necessarily reached peak mania, possibly, but it doesn't really seem it. And so we'll see where we could be, but let's talk about a couple things. This is what I want to show. So we're in log. Okay, so this is normal. We're hitting log, so it's going to be kind of weighted, right? So like right here, we're talking about 18 bucks, 19 bucks. Up here, we're talking about $65,000, right? So, but we have this upward trend. This is just kind of how it looks, right? It consolidates it in a way that understanding it normalizes the peaks, right? The peaks kind of volume weighted. So here we go. Let's look at a few things. We want to look at Fibonacci channels for these market cycles where we have these impulses and we come up and then we capitulate. And what I want to show you is the capitulation. All right, here we go. So right here. So this is the first one. Oh, I don't want it to be zoomed in and blurry. This is the first one I want to show you. Pretend we didn't have this other data and this is all we had, right? You would have drawn your lines for this connecting. This is the bottom, right? With this point. So we have this line that comes up and you would put your top here. And then when you would have got here, you would have moved your top here, right? So this, let me just check, make sure we're all streaming good. I think, yep, we are. So this right here is what your chart would have looked like. And then we just keep coming down, right? From 1,100 and, $63, keep coming down, and you hit this line. You could hope for a bounce, right? But if you didn't get that bounce, what you see is we break this bottom of this channel and we come out into this empty space, right? And there's this capitulation, and then we start to move up. So this is what I really want to show. Is I want to show that this is actually a trend. I'm just curious. I don't know. I didn't measure this before. Yeah, so roughly the bottom here, right? So if we did a time fib from here, pretty close to the bottom, we caught this. You would have been, so January 13th was the absolute low, and within a month we would have had our time fib. So generally speaking, that's pretty close, considering the amount of time over the course of 15 years to be able to get something within a month is pretty dang good. So let's keep looking here. And by the way, let me do this real quick. I'm going to share and pin the YouTube link. So if you want to watch it on YouTube, you can follow along. Give me just a moment and I'll tweet this out. Okay, take this link, put it in here.
Yeah, it works. I'm watching you live. There is a little delay, probably about 2 or 3 seconds.
Oh, okay. All right, perfect. If you want to watch on YouTube, click the link. And I'll pin this here on the jumbo screen, because sometimes it's helpful to actually see it live. Okay, so we've got all these drawings. Let's get rid of this. But you see, we break this trend line, we break this channel, and what you want to do for mapping long-term trends is you want to use the Fibonacci. So we'll come down here. It's the third box. It's going to be our GAN and Fibonacci tools. You click that, and you're looking for the Fib channel. And you want to use the Fib channel. You want to have it set up. So here, let's click on this. You want to go to your settings. You want to have it at 0.25, 0.5, and 0.75, and then 1. That's how we can map that. We can see, look, it actually respected this pretty well. We got resistance here, got support here, came up here, we rode this line, so it had very good support and resistance. Oops, not that one. All right, so this is all the data we have, right? We're trying to figure out where do we go from here, and we see we break this line, and then it's kind of flat. You see what I'm saying? It's flat across, and then it starts to trend back up. So now I want to show you the next channel, which is this one. So we draw a new channel because we start moving up, right? And we're saying, all right, where are we going from here? So we put our low, and now this is the new outside of the channel, right? So now we have this that kind of rides this up, and then we go parabolic again. And we see we come up, gets well respected, but then we break this again. We break this again, and I want to show you something. This is what I thought was cool. You see how when we come back up, we get almost to where we break into that channel again, and that seems to be where we top out, and then we come back, okay? Look at this. Same thing. We have our new channel. We break out. We come back. We try to get back in. We get rejected. Come back out. We try to get back in again. We get rejected, right? So this is what we're seeing as kind of a trend here, is this line, whatever channel we had previously for the previous market cycle, that bottom line of that channel is where we've got rejected. And this is information spanning back years, like I was saying. So it holds up pretty well. So now let's look at where we're currently at. Okay, we're currently on this line. Very, very possible that we repeat this, right? Of course, I'm not going to discount the idea that we just get a bounce here and move up, or that we don't just consolidate over here and then move up, right? Absolutely could happen, but I think one of the most likely scenarios is we do something like this, something like that. And what this would, it actually lines up pretty well with some other time fibs that we're going to be going over. So what I'm saying is this: when you look at the market cycles, you take your Fibonacci channels and you draw them with the charts in a logarithmic view. I think I'm saying that word wrong. I can't pronounce it, so forgive me for being stupid. But what we have is we break out of that channel. When we break that bottom line, that support line, what we end up doing is coming and trying to work our ways back in, right? Which puts in a new all-time high, and we lose that support. We can't get back in, and then we go the other way again. And so we're at that stage where we could potentially be breaking out of this trend, right? Of the current market cycle. And where might we go? I think we might go, once we break out of here, we might put in a low somewhere around 19 to 20,000, which I'm kind of going off of like this support right here. So there's like a horizontal support here, kind of some single prints that would get tested. I could see that as a possibility. Of course, we don't have to, right? But this is just kind of one of the, if we're going into a capitulation, going into a down, I mean, we're clearly in a downward trend. Um, I mean, I don't know how you want to define a bear market, with considering where Bitcoin and Ethereum have been and where what it's been doing. I suppose, right now we're down like 65%. Is that a bear market? I don't know if that is for crypto. I don't know. Maybe it's because I'm just so bullish on DeFi as a whole. But yeah, I mean, I get it. Look, we're down a lot. Typically from highs, we go down about 80 to 90%. That we've done that before on market cycles before, from the high to the low, 80 to 90%. If we hit this 19, let me see if I can get a measurement here. If we get this 19, it would be roughly 72%, right? So we also see that this decreases, this percentage decreases each market cycle. So we were like 98%, then we were like 80%. So maybe 72% or somewhere in there is kind of where we bottom out roughly. But we're currently at like from the low where we were at like 25.5 on Bitcoin, was about 62%, right? I could see us going lower to 19. I could see us trying to get back in here, getting rejected, coming back down. I mean, it doesn't have to be exactly this. What I did is I just copied the same candle pattern for the last market cycle and I put it here. Now, where does that, what type of forecasting does that give Bitcoin, right? That means that around October, November, December is when we would have that low and or breakout, right? We start moving out, which we have a really cool time fib that I'll show you that, like a Fibonacci time. I think it'll show it here. Let me just check. Not exactly. So let me show you on a different thing here. That's the one. So from this low to this high, from when Bitcoin was, so basically the bottom of this parabolic move all the way up here, that gives us a timeline, roughly November to December, of where we might start to have an upwards trend. So I'm thinking that it's going to be sideways with quick and probably, some maybe more downwards movement over the next couple of months. That's not bad. Look, if you're a hodler, it might be a little boring. If you're trading this, you're gonna have lots of opportunities. You're gonna have short opportunities. You're gonna have long opportunities, and you can kind of look for a longer trend. But I'm trying to establish, when might we see a new bull market? When are we going to be seeing, a change in this, and what might be the case, right? And it's still kind of a ways out. If we're talking about November, December, and then all-time high season again, like when might we get an all-time high? Could be the end of 2023, right? So based upon this idea here, maybe in a year from that. So we'd have a good solid year of higher prices trending upwards and moving up to an all-time high, which would be great, especially if you can get in Bitcoin, sub 25K. That could be a very, very good opportunity. And let's see, where does that kind of put us? Where do we find resistance on this bottom of this channel, which we've seen on the last few market cycles we've been rejected from? Approximately, depends on time, right? So here's the thing. The longer we capitulate, so if we capitulate for 2 years, that changes things dramatically. We're going to have a bigger run up, right? Meaning we're going to go higher. We're going to be maybe 200,000 Bitcoin, you know. If we hit the timeline that I'm saying, where we are going to be kind of downward trending with some solid bottoms, like a summer bottom, and capitulation and sideways movement until like November, December, where we actually put in that low, or maybe we kind of break the trend and start moving up, then it might be a year, and we might be somewhere between 90,000 to 110,000. Obviously, we could be a little higher, a little lower, but personally, that's what I think. And let's do like a Fibonacci trend based extension, and just see where some of these numbers come up. So let's say we hit that. That matches perfectly. This is exactly, I hadn't run this before, but this is exactly what we would want to see. So we take it from the low, we go to the all-time high, and then we drag this back down, assuming that we're going to hit that 19,000, 20,000 range, right? And we want, our target would be the 1.618 on this. So here, let me clear some of this up, because there's no point in having all this here. Excuse me. And we'll get that background color off. Let's take this time fib off. All right, so what we're looking at is we want to find resistance along this line. We want to see that 618. The 618 would put it roughly at $124,000 per Bitcoin. So my target's just under that. I would really be looking at a top probably somewhere around 90 to 110,000. But this Fibonacci extension gives us somewhere around that $125,000 per Bitcoin. We've been hearing rumors about this. We've been hearing speculation about this, so people could be going there, and people could front run it as well, saying, "Yeah, I'm not, I'm good with $110,000 Bitcoin. I'm going to be pulling out. I'm not going to wait for 124,000." Right? They're going to try and time the top, and maybe we end up front running this a bit or something. Anyway, this is what I think is probably the most likely scenario. The next all-time high, somewhere around the end of 2023 and the beginning of 2024. Probably some sideways and continued downward movement. We probably take out some lows again, for the next 200 days. And then November, December, we kind of flip the switch, we find good support, and we start moving up. This to me is how I'm looking at the long term. So I think there's really good opportunities when it comes to this, because if you see Bitcoin at rates below 2,500, that's a really good opportunity. Right now we're at 29, and that doesn't mean we're going there today. Keep in mind, this is a long time frame. So we're going to have great movement. So we're talking, like around 200 days of probably sideways, not very fun movement. And, call it a bear market, call it whatever. I don't know, whatever you want to call it. I don't really care. It's a downward trend, move into a sideways trend, move into an upwards trend. So here, let's look at, I want to get off of log, and I want to hide some of this stuff. Okay, so here's our chart right here. The support I'm looking at is here. By the way, if you're on Twitter, appreciate you being here. Hopefully the audio is good enough for you. I do have a link up top, so you can watch the screen share and watch the charting live on YouTube. But this top right here, this is what I'm looking for. Somewhere around here. If we could get that support, that would be great. And it kind of fills this single print candle theory. If you've watched any of my streams before, I talk about this a lot. I love single print candles. Why? Because they get filled. It's like a vacuum. Okay. Imagine negotiating something, or being a part of a deal where an element of your negotiation is just fast tracked and is just moved on. There's no talk about it. There's no defining of terms. Just an assumption is made, and you move on, right? Eventually, as you're negotiating this deal, you're going to come back and say, hey, you know what? By the way, you mentioned this element. Can we talk about this, right? What are you talking about with this, right? You want clarity because you're just kind of skimmed over real quick. It's the same principle right here. It's just green candle, green candle, green candle, green candle, no negotiation, no price, capitulation, nothing. We just move, 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 move. And when we have candles like this, it creates a vacuum, and people want to go back and test these and negotiate the price. And so this is the single print candle theory. And we actually have a massive single print. I mean, massive single prints. These are 3-day candles, and so we move. But you can see this too. Look, we have big single print here, got filled, right? Big single print here, got filled. Every time we have a single print, it gets filled. You can see it, just a big candle. That's all I'm talking about, is just a big single candle, or a whole bunch of candles that there's not a lot of consolidation, no sideways movement. It's just up or down, right? And look, we're putting in a lot of single print candles here. So this is all going to be negotiated again, right? It's great. But this right here would be a great area to test and to get filled. And it happens to be right at this level of support. So if we were to, so this is my current like golden opportunity, my golden look, right? Would be somewhere around November. I'm going to go from October to December. Oops, not that low. That's my sweet spot. If we could hit that, I think that would be absolutely awesome. So I want to do a trend line and see what that looks like here. All right. So long term, we might just continue this trend, right? Where we go, let's do an AB. All right, so Elliott wave, 0, A, B, C, maybe, depends on how, I don't know, somewhere in there. And then probably July, because we have something in July. So something like this with, let's get some sideways movement. We break out, right? We break out, and this is our kind of bump and run situation. We come back down, we test this line somewhere in here, right? Sorry, I didn't mean to go that low. Come back down, we test this line, maybe test the support, and we start the run, right? This is a bump and run scenario, and we break this downtrend and we move on out. I think that long term, this is how I'm looking at the market right now. So until proven otherwise, or to think that there's something else going on, which would mean breaking this yellow trend line. Because we've got these times that matter quite a bit, this November, December time. If we just come over and we break this trend line, and we just keep going like this, right? I'm probably going to be looking at things differently. But as of right now, I think we could very well get 20,000 Bitcoin, 19,000 Bitcoin. So let's talk about opportunities here, because down doesn't mean bad. Down means opportunities. All right, let me back out. By the way, I see people in chat, Worldwide Crypto. Goddard, Devin, what's up, everybody? Much love. I see people here. Let's get Tim Nation up here. If you want to talk on Twitter, just request the mic. Go ahead. I want to hear from you as well. I mean, no pressure to do so, but yeah, happy to have a conversation about it. So I think that this could be the case. Now here's here's another scenario. Let's talk about this, where we don't do an A, B, C, D, E. We just do an A, B, C. So we have our zero wave. This is Elliott patterns, or Elliott wave patterns, by the way. So we'll cover those soon. All right, so we have 0, we have our A, we have our B wave, we have our C wave. Now, we have a cool Fibonacci time that we're in right now that very well could have caught this bottom if we don't go lower. Let me show you what I'm talking about. The trend-based Fibonacci time, which I love. I love it. So we take it from here, we put it there. Look at that. For Bitcoin, that's probably the low for Bitcoin for a while, right? I mean, look at this time. Actually, I haven't run this on Bitcoin because I run it on Ethereum. Excuse me. I run it on Ethereum. And look, right dead center in our Fibonacci time window, we put in that low. What the hell? Is that not crazy? I love it, but you're seeing this. This stuff plays out. And look, support, horizontal support, horizontal resistance, trend lines. That stuff makes sense to me. Fibonacci time is like one of the few things that makes no sense to me when it comes to technical analysis. But guess what? I don't argue with it. Why would I argue with it? Why would I argue with it? Look at this. I'm gonna be like, oh, I don't know. It's a weird window. The hell? we literally called it perfect right here in the center. It gave us the dead center of the window, the perfect low, catching Bitcoin. Bitcoin's dropped to 25,500. Incredible. If you're watching this on YouTube, that's incredible. So this is a good a good bottom right here. And this was taken from this low to this high, which at the time, this was the yearly low. So the yearly low, the yearly high, and it said, hey, watch out for this window of time. And we moved. Did we not? That's pretty cool. That's pretty cool. So that very well could be the bottom for Bitcoin for a while. What does that mean? It means we maybe come back up and we try to test this line. So what we need to be aware of is obviously we can break that line and we keep moving up, right? We could enter into a sideways range, right? There's a lot that can happen. We're learning what the market wants to do. We're seeing it because it's volatile. It's in flux constantly. So we have to be fluid with our ideas. But to get rejected off of this line, first off, we would fill these single print candles. We would hit this trend line. And let me show you one other thing. I'm guessing is that's not what I'm talking about. We've got our 618. Want to find our daily chart because that I don't think I would have drawn it like that. So I'm gonna cancel that one out. It's relative to time. So yeah, I guess it depends on how quickly we move. I think yeah. So this could be a valid idea. Let me show you what I'm talking about. If we come up and it starts to go fast, we hit this trend line, we hit the 618, like we get to 38,000 pretty quick with Bitcoin. That would meet a lot of criteria for short opportunity for me, right? Let's look at some other time frames real quick. Now that we have a bottom, a very solid bottom, let's go from this high to this low, and let's get a Fibonacci time stamp on this. What might we be looking at? Okay, so we might look at like June 9th, June 7th to June 10th, something like that, as maybe the end of a trend. So something like we come up and we trend upwards and we just mess around in this area, right? And then we break back down, right? that could very well make sense. I think that that's probably my current idea that I'm going with. There's also a point of control real quick. We're just doing some quick measurements. Point of control right here at 39,782. So there's a lot of reasons to think that right here we're not going much further, right? I think if Bitcoin gets to 38,000 to 40,000, somewhere in there, we're not going much further. And I think that we'll probably see another downward trend, maybe the first part of June. So yeah, we'll probably have 2 weeks of running up, which is great because, you know, I mean, I'm in a long already. We have videos we were posting in the Telegram where we were going over the calls on Ethereum, and we had these levels laid out for a while. We looked at 3 opportunities for downward trend if we didn't get our longs on an earlier kind of uptrend before we broke some critical supports. And yeah, we got into our longs. We're in a long, and we have, you know, our target set in about this area. So we'll see what ends up happening. Doesn't mean we can't go down or anything. It's just over the next 2 weeks, we probably will trend back up and we'll start feeling good again. And as soon as you start feeling good again, boom, we'll go back down. Just kidding. Hey, Goddard has a question. He says, so question, Fib works because everyone follows it. So it's the outliers we should study. Who caused it? What caused it? So I believe the question is who caused it? What caused it? So are we talking about the Fib itself? Like who caused the Fibonacci's to work? I think is the question. I mean, everyone. Okay, so what is causing the Fibonacci? I think is what is the question. So I'll wait for a follow-up comment on that, but I think that that's the question. So the Fibonacci is a you know, when you look at like a seashell, you hear this all the time when it comes to like the spiral of a galaxy and the spiral in a seashell, and you know all these different things that happen in nature, right? There's this Fibonacci number, and I think it's like the 382 and 618 and all this stuff. Anyway, it's it's I don't know. I don't know if that's why it works, because it's found in nature and some like golden number, you know, created by the gods or whatever. I don't know if that's the reason. Okay. But anyway, that's why we look at it, right? Is because someone said, "Hey, this is a cool idea. I'm gonna map it off of this," and people tend to, you know, agree with him. And he said, "Yeah, let's do it." So I don't know, man. Like it works because it works. Whether there's something behind it as far as natural laws or principles, yeah, I don't know. But this is what I do know. What we're measuring. So let's hide all this real quick. Let's get all this hidden. So in a sense, it works because it works. And what we're measuring is percent that it's moved. All right. So we go from the all-time high to the all-time, well, the new low, right? In this case, what we were saying is if we come back up to this area, right? This is a 0.6 and this up here is a 0.66. Okay. What that means is we have traveled 60% or 66% of this total distance. That's what we're measuring. And the idea is that because these numbers are so prolific in nature, that it makes sense to chart them, because you're going to find the same numbers randomly on your chart. Okay. Maybe that's true. Maybe it's not true. I don't know. But if you have investors looking at that level, I'm telling you, I'm one of them. I put longs in there, I put shorts in there if I have other reasons to believe that that's going to give me support. So I don't trade this alone, right? This number alone means nothing. It's a data point, and we're trying to compile multiple data points and move. So let's see. So I get it, but it's not. it's not only the tool, it seems like it's the most popular. So market makers would use that against us. Yeah, okay. So they very well could, right? And this is why you don't just trade one data point alone. So market makers, we have to get in the mindset of market makers. It takes a lot of money to get their positions filled. They have millions and millions of dollars, big positions. They move markets, and especially with Bitcoin, like look, I made a recommendation to download an app called CoinGlass. CoinGlass will give you really cool information like liquidations, open interest, and stuff. Also, it'll tell you when a whale is moving Bitcoin or moving Ethereum. I'm talking a lot of money. Okay, like 1,000 or multiple thousands of Bitcoins. We're talking hundreds of millions of dollars. Glass, GLASS, CoinGlass. So this is a really cool app, but you'll see that these people are moving a lot of money around, like a shitload of money around, hundreds of millions of dollars. And it takes, I mean, someone pulls out, or a couple people pull out, their, 5,000 Bitcoin that they have, that moves the market. That absolutely moves the market. And if they come back in, they're moving, or they're adding their Bitcoin back in, and they're buying, hundreds of millions of dollars of this. Obviously, that moves the market. Or what will end up happening oftentimes, okay, is whales work together because, like follows like. So if we have a trend line here and whatever, they will work out themselves. This is so there's two parts of technical analysis as far as how I trade. We look at the lines, we look at the charts, we find other investors. We find where Small Cap and Tim and Jeff and Sir Crypto and Uber, right? Where Ali and Goddard and Devin, where is everyone? What the hell are they looking at, right? We want to find all of these individual people, because Devin might be looking at this horizontal support. Sir Crypto might be looking at Fibonacci's. Goddard might be looking at this trend line, right? I'm looking at Fibonacci time, okay? And together, if we have a few things line up, we go, okay, cool. Devin and Goddard and Sir Crypto and Cameron, like those people are going to buy this level more than likely, because that's what they're looking at, right? So we're looking for confluence with people in the market. That is why we do technical analysis. The other part of this is we build a story, a narrative, a scenario for big money, for big money that requires people to get wrecked. You realize, in order for their positions to get filled, because trading, and I'm talking about day trading specifically, I'm not talking about hodling, buying spot and holding it, and waiting for it to go up or whatever. Okay, day trading, leverage trading, this type of stuff right here, this requires people to get wrecked. It's a zero-sum game. If someone makes money, it's because someone else lost money. That's how it works, right? It's a sport. We have to look at this as a sport. So we want to look and see, all right, what is the other team's strategy? What are people doing? And so in a sense, I'm not necessarily trying to trade against everyone like Sir Crypto and Small Cap and Goddard and Devin. I'm not trying to trade against everybody. I want to trade with the market. And I also want to trade with the whales, right? If they're trying to wreck people, I want to be like, all right, I want to be a part of that, in the sense of like they can move the market. So I'm not going to swim against the current. I'm going to go with the tide, right? I'm going to surf this wave, so to speak. And because I mean, look, you're not fighting a wave, you're not holding a wave back, it's coming. So you can let it crash you and topple you, or you can get on a board and ride it, right? And that's what we're doing as smaller traders. Unless anyone in here is trading with the 5,000 Bitcoin or something, then my apologies, you're definitely not a small trader. So you have to realize that they need to wreck you, they need liquidations. And so when we call these strong bottoms, and it's where oftentimes here and here and here, right? Sorry, here, like this, these big wicks. Okay, it's not nice and fluffy and lots of negotiation and price, movement, whatever. That's not what's happening here. Okay, what's happening here is they dump a whole bunch. They have a buy order sitting here, and they let the liquidations, because keep in mind, if you have a stop loss, that's a market sell. If you have a liquidation, that's a market sell. So if you're trading, if you've never traded leverage, let me tell you what I'm talking about is you have you're saying on an exchange. Let me change my colors. Where you say, all right, so my liquidation level is here, and I'm buying in here. Okay, this will be our buy area, and I'm taking profit here. Okay, and so this is how you trade. But if the price goes down here and hits this liquidation level, okay, your position sells off automatically and you lose your trade. You lose your money. It's like a stop loss, okay, but same with liquidations or whatever. But it's a market sell, meaning the exchange, you've got a contract with the exchange you're trading with to say, if I come to this level, you have the power to liquidate or to seize the money on my account, to take it. It's gone, right? And you can sell it for me. They don't put in a limit order. They're not saying, all right, well, we'll just take the next nearest price. No, it's a market order, meaning you're going to take whatever price they give you. Whatever comes your way, you're taking it, right? And so it fills because they're sitting here with their limit order, the whales. The whales have a limit order, but they need market orders to fill their position, right? And this is exactly what happens. So they drive the price down, they hit a whole bunch of liquidations. These liquidations start rolling in, and it's dominoes falling, hitting one after the other after the other, and it's forced, right? Filling their positions, buying their positions, because they're selling to somebody, right? They're selling to somebody, and they're selling to these whales. So their $22 million position is getting filled, right? And so that's why you see this wick right here, because they're just absorbing all of this, and then they start to buy it. And so the price dumps real quick, and then everyone starts buying back in, and the price reverses. And this is often, so we talked about a swing failure pattern, which is where it happens usually right after another low. So let me clean up the board here. Let me just see if I can delete all that. Okay, what I mean by a swing failure is, like, let's say this is our bottom, right? That means that all the people that bought here, they could take a very high leverage, high risk position. And trust me, people do, because I was laughing my ass off because there was people shorting and getting liquidated on a short. People were saying, Bitcoin's at 26,000. I want to short this. And I was laughing my ass off because it was so dumb. Why would you be putting in a high leverage, like a 50 or 100x short a Bitcoin right here? Terrible idea. Anyways, that's besides the point. These people here could be high leverage. There could be a lot of liquidations, a lot of stop losses, right? Because they probably took their profit and they probably moved their stop loss to that bottom, saying, all right, if I take out that bottom, my stop loss is filled, right? The price moves, comes down, it comes down, we get another wick like this, breaks that line, people get stopped out, they get liquidated. And again, the whale is easy, sitting here getting filled. He's like, yeah, that's my market. That's my target, right? And just getting filled. Anyways, so that's what I wanted to point out there as far as we call it a swing failure pattern. We talk about liquidation. So why are we even talking about this? Because we did the TA, but does it make sense to understand, or does it make sense with a potential whale narrative? Where do whales want to take this, right? Whales want low prices, right? They want to buy in low and they want to sell high, obviously, just like all of us, right? So there's quite a lot that can happen here, and I think what makes the most sense is for them to try and get a sub $20,000 Bitcoin. We have a lot of reasons that people are going to be looking at that and accepting that. They're going to be looking at this level and accepting that this variable could be going down lower. I think that probably the most likely scenario is that we continue to come up here. We maybe test some levels. We continue to trend, right? And maybe we just have a quick little, I don't know, dart down, right? And I don't know if we actually hit this 19, right? Maybe it's something like this where we come up, we hit a level, we do come back down, we hit a level, right? Kind of capitulate. I don't know. It's really hard to say, but I think it makes sense for them to try to get to 19 to 20,000. A lot of people are thinking that it might be just above that, because here's the other thing. This is the last little part um, of the understanding and the psychology of whales. They don't want to buy into a market that is dead and has no faith and has no support either, right? So, and who does, right? When you see a rugged project, unless it's Luna, apparently, right? You don't want to buy that up. Look, I'm just joking with Luna. I know people have been swing trading it, having a good time. So I'm glad that crypto's remained interesting. But if there's a lot of people looking at 19,600, right? Maybe you just go a little bit lower. Maybe you take the market and you just, ooh, and people are sitting there waiting, like, come on, hit it, hit it, hit it. And then they start to move and move and move and move. And then everyone that was waiting right here, right? Everyone that was waiting, being like, no, I want to buy that level. I want to buy it. I want a $20,000 Bitcoin. They start seeing the price move. What is that? FOMO, right? It's FOMO. So the whales can make this happen. They can invest money in making this happen and creating the FOMO. And then what happens? Everyone down here goes, shit, I missed it. And they start buying, right? They start buying and buying and buying and buying, right? The whales sell off again. They take their initials that they invested, right? They're good, they're in the clean and the clear, and then the market takes over and starts to move back up. People buy, 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 right? So they get their position filled at a really good price. They get the liquidations, they get everything. They don't quite give you what you thought you were going to get, so that there's FOMO and the market can move up the other way, right? Very, very possible, because the thing is they need the market to take over. They can push it. They can send it in a direction, but it's like pushing a boat out to sea or something. Like you can get it going, but it needs to take over for itself. And the market has to take over. So in this scenario, let's put this trend line back on. Let's say we have this. Do we get a bump and run pattern right about here? Possibly. I think so. I think it's and it matches with the timeline. We're looking at like October, November, December, somewhere in here, right? So probably downward movement, sideways movement, upwards movement. And then the end of the year 2023, we start approaching all-time highs, I think. So that's kind of where I think Bitcoin is going, and Ethereum is going to follow. Ethereum is very, very similar. I think the pattern for Ethereum makes just as much sense. The TA is very, very similar. So I think it's a possibility that this is what we get. We could go a little bit lower. I would personally, I'd love to see anything below 22,000. I think that would be cool, or maybe 23,000. So let's talk about short-term. Goddard says, can you buy and sell shorts and longs in crypto like options and stuff? Yes, you can. You have to be on an exchange. The one that I use is Bybit. You have to use a VPN, blah, blah, blah. If you're a federal agent listening, I don't do that. Real, it's just entertainment. Look, Bybit is a great exchange as far as I'm concerned. I like it. Fairly trustworthy. I've seen some stuff where, you know, some bad things have happened as far as like the systems glitching out, whatever, and they've taken it upon themselves to take care of the people, refund them and stuff. But yeah, you're not exactly, yeah, it's just fun paper trading, as Goddard says. So it's just fun paper trading. That's all we're doing here. It's just education, not financial advice. Anyway, let's talk real quick about the opportunities at hand. Okay. I think, like I was mentioning, we've got a good opportunity for a long here. Hopefully you're in a long. Hopefully you bought that dip, and this is really what we're talking about when we say buy the dip, right? We're not talking about the first sell to come on a pumping chart. We're talking about this. We're talking about key levels. We had supports across the board. This was a really good level to buy and was forecasted, right? Even with Ethereum, because I mostly chart Ethereum. I don't chart Bitcoin a lot, though. I love Bitcoin. It's just with I've got CryptoList, which is my Ethereum wrapped project business, right? My token list. So it makes sense for me to chart Ethereum more. So I'm looking at targets somewhere in here for a short. Proper risk management, not more than 1% of your trading portfolio. You have your stop loss, you have, and your stop loss is going to be where you're wrong, right? So let's do something real quick. Let's kind of map out a potential trade, okay? I want to share my screen. Okay. I'm going to share my trading tool. So if you're part of List, this tool is going to be made into an app, and you'll be able to use that. So what you want to do is you want to put in your account size, whatever it is. On this channel, we're often doing like $1,000 or $5,000 as far as like our paper trading goes. So the account size is right here, and I want to make sure that this is being seen. Yep. Perfect. And let me zoom in a little bit, get rid of some of this clutter. Okay, let me just check. That looks pretty clear. Okay. So here you want to take your account size, whatever it is, 500 bucks, 500,000 bucks, doesn't matter what it is. Okay. You want to put in whatever you're trading with. Okay. Not your life savings, not whatever, but whatever amount you have to trade with. So let's say we have 1,000 bucks. We want to do risk tolerance next. And when it comes to the risk tolerance, if you're new to trading, we want to put 0.5%, right? 0.5%. If you feel like you're good and you can be disciplined and manage your emotions, you want to do 1%, something like that. It's very rare to go over 2-3%. So I like this. I like 1%. That's typically where I'm at. And now what we do is we put in our trade and we see if it's a good trade, if it works. Okay. So let's figure this out. First off, trade type. Is it a short or a long? We're going to go short. Okay. Because what we're looking at is a buy level of here. So I'm probably going to start averaging in. I want to say, all right, 37,450. So let's put in here. So 37,450. Okay, that's going to be my first one. And I'm not doing like perfect TA, right? I'm just kind of like eyeballing this. I'm going to say, all right, and I want my next one at 35. Let's just do this real quick. So 38,500, and let's say then 3,900, or sorry, 39,000. Okay. We're just going to tick these boxes real quick. Stop loss, and I'm going between the chart and the calculator real quick, but it's just because I'm getting levels. So let's say 48.5. I don't even know if that's going to work, but 48,500. If we hit that, we are we're going to end our trade. We're going to say, all right, we were wrong in our trade. The stop loss gap is 26%. That's far. That's pretty far, right? So anyways, now what we want to do is it'll tell us our position size. So just because we're have a risk, excuse me, a risk tolerance of 1% or 0.5%, that doesn't mean that's what we're trading with. That means that's what we're willing to accept as a loss if we're proven wrong, right? So that we have $1,000 account, we're going to risk $10, but we can actually put on, it says position size, $37.63. So sorry, I need to cancel that. All right. So $37.63. We have 3 positions we want to ladder into, so divide that by 3, and that's going to give us about $12.50. So we're going to say, all right, $12.50, and we're going to fill this in all the way down. Okay. Now, where are we taking profit? Because this is important. We need to put in our take profits. So what we're saying is, this is for a short. We're saying we're going to come up here and we're going to buy, 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 and then we're going to come back down and we want to take a short, or we want to take profit somewhere. So let's say that we're going to take profit at 32.5. So our first take profit is 32,500. Okay, we're taking 10% of our profit. Is that right? Yeah. Okay. And then let's say we want to close out the trade at 28,000. So 28,000, we're going to close out the trade. Can we take this trade? No, we can't. See this red? 1.62. That means that for what we're risking versus what we're going to get paid out, we would only get 1.62% more than what we're risking. This ratio has to be 3 or greater. So when we're trading, we don't then go back and kind of change this information so that this goes green. Okay. What we put into the calculator is the trade that we want to take. I'm going to bring Rob up here. And it's based upon not arbitrary things. It's based upon TA, the whale narrative, and where we would be proven wrong. A stop loss is not an arbitrary, say, 2% away from entry. That's not how you do it. You put your stop loss where you're going to be wrong. And if we're going to be wrong at 48,500, then we're going to be putting our stop loss at 48,500. And if we don't get the profit, we don't get the return that we need to justify the trade, then we don't take the trade. This is part of the discipline, right? This is part of the discipline. We have trades all over. If it doesn't work on Bitcoin, see if it works on Ethereum. See if it works on another token, if the technical analysis and everything lines up, right? There's opportunities everywhere. Don't get into this mindset of like, oh, this is my only opportunity. I have to buy this. I have to find a short for here. If it doesn't work, it doesn't work. Now, I just did a quick little thing. That wouldn't be the number that I have. So let's see if 43.5 actually changes this for us. All right, so that gives us a bigger position size that we can take. So we can take $73 instead of the 30. So we'll do 73.92, divide that by our 3 positions that we're entering into. So 24.5. Hold on one second. 24.5. We'll fill this in. Okay, now look at this. And again, don't take this trade. I'm just putting in numbers, right? But you see what we have here? If this was actually our stop loss, like if this is where we were proven wrong, and these were our entries, and we put in the position size, all of this, look, we're good on the risk adherence. We're good on the risk versus reward. And now we put in our reasons for the trade. So we have a Fibonacci, we have a channel, right? We have a point of control. And look, it says take the trade. So we take this, we put in our notes, we say, whatever, this is the reason for our trade, blah, blah, blah. And then we can actually save it, and it will log it into a database, and you'll be able to reflect back and see your trades, your statistics, how well you're doing, and then actually graph it into a model. So this is a whole tool that we're building out. So it's really a cool thing. But this is how we use the trading partner, because it makes sure that you have proper risk adherence, that you're getting the proper risk versus reward, and you have reasons that you know, right? You're telling yourself this is the reason for the trade. The last thing I want to say about this, let's say this is a setup and you come to this and you're like, this is where I want to be, and you set your trade, you let it ride to profit or to stop loss. Now, isn't that weird? And Rob, I'm going to come to you in just 1 second, man. So thanks for waiting. But here's the problem. Here's the issue. Sometimes we lose track or lose faith of the trade that we're in. And so maybe we're not quite there yet. And we say, you know what, I don't know if it's going to get to 28,000. I'm at 30,000. I'm going to take that. I'm going to take it. Well, look, it changes our risk versus reward. We're now at 2.77, not 3 anymore. And we go, yeah, but it's okay because I had more money at the end than what I had in the beginning. This is based upon winning 3 out of 10 trades in order to be profitable. That's all you need to win is 3 out of 10. Okay. But here's the thing. If you lose, you fully lose. You fully get stopped out. The exchange is not going to say, hey, sorry, man. Sorry you got stopped out, but instead of losing your full amount, we're only going to lose 80. You're only going to lose 80%. No, you fully lose. You take a full loss. That's an L, right? And when you win, you have to take a full W. You have to take a full win, right? In order for this to map out. Because if you're 3 out of 10, right? But you're not but you're not getting full W's, your 3 out of 10 changes. Now you got to be 4, now you got to be 5, now you got to be 6 out of 10, right? Because you're not letting it go your whole way. And look, if you don't believe in the trade, if the technical analysis isn't there, you're forcing it, then that's your problem. It's not the trade, right? So you play this out. You have your first take profit, which look, in this scenario, let me get back to this. I think it's 28, and then Rob, I'm coming right to you. So 20,000. In this scenario, I'm taking 10% early. That's 8.47. Maybe I want to take a little bit more. I can change that, right? Perfect. Maybe I want to take 13%. What does that mean? Instantly in profit because I'm making $11. I took 13% of my trade, instantly in profit. This is a free trade. That's how I manage my risk. I don't end my trade early. I take my profit maybe a little bit more than I need, right? As long as I still have this 3-to-1 ratio. So you can take 12%, right? And that's a free trade. You can take 13%. That's profit, right? You're in profit. Very, very cool. You adhere to all the rules. Everything's good, right? And you're not cutting your trade short. You're not selling yourself short because like, oh, I just don't know, right? You let it go. You get your free trade. You don't move your stop loss. You don't move. No, you leave everything the same. Leave it the same. Trade it to your stop loss. Trade it to victory. That's where we go. Hey, Rob, go ahead, man. Thanks for waiting.
Yeah, thanks for inviting me up here. So I've been following Bitcoin since 2011, I think. Well, I think it was like about 40 cents a share or something like that. It's fascinating. And I really wish that I would have gotten into it, but I was a non-believer. But I've been following it and other cryptocurrencies, and I've learned, that Ethereum is a good one, and Monero was supposed to be really good. But I mean, your question here says, where is Bitcoin going from here? Does that mean that Bitcoin is gonna end, or has it been infiltrated or harmed in a way where we can't trust it?
No, and I don't mean to give that impression. That's not my view at all. I think I'm not sure when you tuned in. What we talked about, Rob, is Bitcoin has it has the potential to go lower than where it is right now. which I would like people, hopefully, to view as an opportunity, right? It's an opportunity to get a good asset at a low price. So that's an opportunity. I think my opinion is that somewhere around November and December, and this is not trading advice, this is not financial advice, but I believe somewhere around November, December is when the capitulation will start to turn into an uptrend. I think we can expect lower prices. I think we can expect lower movements. There's still going to be great opportunities if you day trade to buy a long, meaning you expect Bitcoin's price to go up, as well as opportunities to buy a short, thinking Bitcoin's price is going to go lower. And I think that that's going to continue on for the next few months, approximately 200 or so days, until the capitulation is complete and we start moving more sideways and up, and we move to an all-time high, which I have targets at that point somewhere between 89,000 and 110,000 per Bitcoin.
Okay, so let me ask you a couple more questions, and then I'll go back down. How low do you think that Bitcoin is going to go, if you had to guess?
I think that we could reasonably expect Bitcoin to break below 25,000, and so I would have a target somewhere between. Sorry, I had a call come through. Hopefully, can you hear me okay, Rob?
Yeah, say that again.
Okay. I had a call come through, so I had to exit out. So yeah, so I think breaking below 25,000 is a reasonable expectation, and I would be looking at a target somewhere between 23,000 and 19,500. So somewhere in there would be my area that I would look at.
Yeah, Bitcoin has done a lot of funny things, that's for sure.
Yes.
My last question is, it is not related to Bitcoin. It's related to cannabis. Do you see that going anywhere at all? I mean, it's got a lot of headway on the stock market. There was a lot more, but they were ones that were, I guess they were fraudulent, or they wouldn't go by the stock exchange rules and stuff like that. But I mean, I would think that that's a no-brainer.
Hard to say. I don't trade stocks. I don't do a lot of research in. I've never bought a cannabis stock. I know that they had their own little mania. They had their own support. I've also seen a stock. Shoot, what was it? I watched one. I had a buddy buy into it, and he was telling me about it, and I looked at it, and it was so clearly manipulated by some firms. It was so clear. They would drive the price down. It was just incredible to actually view the TA on it. Look, stocks are manipulated just the same way that crypto is.
Yep.
So I think the best thing to do, and again, not financial advice, this is what I do, right? Find something that you believe in, find something that makes sense, and try to get it at a good price. Time that we hear this saying a lot, time in the market beats timing the market, right? What we're talking about here is trying to time the market, but if you can get in at a good price on an asset or a business that you believe in and has, you've done proper research on, has fundamentals, is following whatever the SEC has to say, right? So there's longevity, not because I think that there's some godsend, but because there's some form of longevity. They're not going to get put out of business or sued for violations. If that is happening and you believe in it and it's a good price, that's a big part of this whole thing. You know what I mean?
Yep. Okay. All right. That's all I wanted to ask, and I'm sure there's a lot more other important people in here than I am.
No, man.
Thanks very much.
Nope. I appreciate it, man. Thank you. Okay. Very cool. That's all I wanted to kind of cover today as far as Bitcoin, where the market's going. I thought it's pretty interesting analysis. Let me just back up. I want to go to this log one more time and show you the real kind of idea here. Let's go. I want to do the 3-day so I can actually zoom out proper. This is the main takeaway for today. We have the trend lines. Let's see right here. So this is the first kind of market cycle, or a big market cycle, right? We come up here, we break out, we come back up to test this bottom line, right? And that's where we put in the high and we get rejected, okay? So then we map it, we get rid of that one, we put on this one because now this is our high, these are our lows, right? Very similar thing. We do our thing, we break this bottom support, come back, we test it, we don't break back in, right? So if we're going to follow that pattern, here's our new chart, right? We're at this point. What do we expect? We expect to break this, right? And maybe hit this level and come back up and try to test it, right? Maybe 110,000, 190,000, somewhere in there. The Fibonacci trend, the trend-based Fibonacci extension puts this at $124,000 per Bitcoin, right? Possible, right? A lot of businesses are coming into Bitcoin. A lot of businesses are seeing this as a good opportunity. And look, I saw this thing the other day that was really cool. Have you ever driven by like a natural gas plant, or some? Look, I'm in Utah. North of me, few hours is a sulfur mine, I think is what it is. And they have this torch. It's a stack. It's a cement stack, and it always has a flame on top, burning this gas off, right? I have heard that some of these places like sulfur mines and propane or whatever it is, natural gas, they have this burn off and they're now converting it so that that energy that's being burnt off, and it has to be, right? And it's clean. It's totally clean, right? It burns off when it actually ignites or something. It's just releasing oxygen or whatever, or anyway, whatever, some shit into the atmosphere, whatever it is. And they've converted it to harness, right, and power a power source to run Bitcoin mining rigs, right? So now there's a way to monetize even things like burn off for these plants. There's a lot of cool, innovative stuff that people are taking on and are going to be doing, right? This is why centralized planning and decentralized finance, right? DeFi, decentralized, meaning there's not one body governing how this works. This is why it's so great. Okay, who in the hell would come up with something like like, oh, let's burn this off and attach it the power source and mine Bitcoin, right? I don't know, but someone did, and that was a really good idea. That was really cool, right? And it's just gonna go forever. Why? It's free power for them, right? It's burn off. So that's a really interesting idea. There's a lot of cool things. People are very inventive, creative, very smart. And I like to see what people can come up with. So Bitcoin's going to continue on, crypto's going to continue on. These are opportunities. If you're looking at the screen, you're looking at 10 years, a decade worth of charting data right here. And it's done some pretty amazing things, and I think it will continue to do some pretty amazing things. So don't let red scare you. Have your targets, have an understanding. If you believe in this, you see what it's about, then try and get it at a good price, right? So I appreciate everybody. You have a lovely, lovely day. Happy Monday. Start off your day right. And thanks for tuning in. We'll be talking to everybody very, very soon.